Good morning. Daily financial news, Tuesday, July 14th. And this is the day that I was talking about last week where we would get a look at some bank earnings. And in reality, it's kind of a mixed bag. Basically, if you have a trading desk, you're kind of cleaned up last quarter because lots of people were at home and we've heard all about the Robinhood accounts and things of that nature. It didn't matter whether it was just a equity trading desk, a commodities trading desk, currency trading desk. You were able to exceed expectations, a la J.P. Morgan and Citigroup. But when you go back to traditional bank lending and you kind of remove that trading desk, you have Wells Fargo. And to quote Wells Fargo, I'm going to quote their CEO. Where is it? We are extremely disappointed. Ouch. The CEO is Charlie Scarf? Not sure. Scharf? Scarf, probably? I don't know. Basically, Wells Fargo, I told you the things that I was looking for is loan loss reserves. And all of them. JP Morgan now has 3% of their loan book set aside. Wells Fargo sets aside $8.4 billion more, and that was more than the Q1. I talked about this yesterday. Would banks set aside more? And if they did set aside more, would it actually be larger than Q1? Wells Fargo smacked us. Said, "Yep, we're going to not only set aside more, but we're actually going to make a larger loan loss reserve than Q1." That's that's an ouch and a half. Wells Fargo, we talked about a dividend cut coming, right? They were the one that was identified by the Fed after the stress test and said, "Sorry, can't continue to pay that out." They had to cut it 80%. The general expectation on the street was 50%. So they took it all the way down to 10 cents. Again, not a sign of strength. Wells Fargo's in trouble. They lost $2.4 billion. But as I look at that and realize that they set aside $8.4 billion for loan loss, right? Kitchen sink quarter that we've talked about for 6 to 8 weeks now. We're going to have to see if Wells Fargo can get through this, right? They're just a bank, if you know what I mean. They're not a trading desk. They don't have diversified income. Their book, so they have 10.4 billion in commercial loans that are, what do they call it? At risk. That's an increase of 140%. I don't even think we're in the worst of it yet. And it's already at 10.4 billion. Oof. Wells Fargo. Ouch. Interestingly enough, I didn't even know this, but they have 32.7 billion in loans to oil and gas. Oh, ouch. Wells Fargo is going to have some pain for years to come. Yeah. They still did 17.8 billion in revenue. That's still that's a lot of money. They were expected to do 18.4, so they came in a little light. Again, when the CEO comes out and just says, and I quote, extremely disappointed, that's a bad quarter. But I remember a CEO of a tech company I was at 25 years ago. We had one of those quarters. It's actually where I experienced the kitchen sink quarter. And we did that in the quarter. The CEO came out the same way and just was, it's the worst conference call I think I've ever heard, and was just really negative. And what he was trying to do was put in the floor. He's like, get all the pain out now. So I'm wondering if Charlie is doing the same thing. He's going to talk down the company for the next couple of days, right? All these interviews he and his CFO have to do. I wonder if their goal for the next, call it this week, is to talk down the company, wash out all the weak hands, get a floor under the stock. so that they can build from. It's not a bad strategy. I've experienced it once. It was 25 years ago. It was in a company that made disk drives that used to be this big. Now they're this big, but that's what they were when I came out of college. So it's going to be interesting. Yeah, the banks, we got to watch the banks, right? They're kind of the lifeblood of the economy, lending and borrowing and saving. And they tell us something every 90 days. And what they told us in Q2 is being a traditional mom and pop bank sucked. Being a trading desk, Wall Street focused, won. All right, JP Morgan crushed it. JP Morgan beat on top and bottom line. They did $1.38 versus $1.04 expectation. Bond volume was up huge. Equity trading was up huge. Again, record trading volume. JP Morgan crushed it. And they have 3% of their book set aside for bad debt. I heard an analyst say that it looks like Jamie Dimon is building an ark. What I think that means is he's building the ark early so that if it rains later, he has enough set aside that he and his bank will survive. Pretty good analogy, I think. Let's all hope the ark's not needed, right? But preparing early is never a bad idea. Other thing I noted, I probably should have started with this, is my rant yesterday, if you want to go back and listen to it, about Tesla being up 12% or something early morning. I'm really glad I did that. It's always nerve-wracking when I kind of put out stuff about an individual stock acting weird, because sometimes I'm wrong, and the beauty of social media is I get reminded all the time when I'm wrong. But where's the love when I get it right? Man, I called Tesla right yesterday. Man, see that great reversal? I'm wondering if tech, the big five, the big 10, whatever you want to call it, if yesterday was a top, at least a short-term top, that sell-off in the afternoon was wicked. So it'll be interesting to see what happens there. It'll be interesting to see if the NASDAQ continues to show cracks. I've been long saying on this channel that a lot of my friends in the Bay Area who are in tech are like, it's not as strong as people are saying. So we shall see. All right, so we hit Wells Fargo, we hit JP Morgan. Oh, Qantas. I don't know if they're an airline in Australia. Just showing the long impact in airlines. They have essentially canceled all international flights until March of 2021. March of 2021. Now that's obviously they can add flights very quickly if, for example, a vaccine came out or this thing just went away or whatever. But we're starting to get a feel, folks, in my opinion, that we're in for a long recovery. And, you know, if Qantas is canceling international flights, it's going to be the southwest of, essentially Australia, just doing little hops here and there. So, and by the way, Australia is huge. I've flown from the West Coast to the East Coast once. That's a long ass flight. California shutting down. All right, going backwards. I actually can't say shutting down, but certainly going backwards, canceling outside operations. This on again, off again thing is going to crush small businesses, right? If you were a small business that was suddenly ramping, it's got to be heartbreaking, heart-wrenching. And I mean, I don't have any good words to say other than there's a lot more pain to come, I'm afraid. I think a lot of us wanted the stock market V-shaped recovery to be an economic V-shaped recovery, and I just don't see it. That analogy I had yesterday that I finally put together is the stock market sure is in a V, but is it a W? We'll see shortly. The economy, I don't see how we don't exist in an L. I just don't, especially with this on again, off again, Sun Belt. I mean, it's just going to be pain. There's hidden pain. There's hidden pain in forbearance. There's hidden pain in evictions. There's hidden pain everywhere that we're like closing our eyes and pretending it's not there. There's another shoe to drop, I'm afraid to say. So the next battle, the next political battle that I'm going to stay out of on this channel, but it's interesting because I'm in California and it's already smacking us in the face, is do kids go back to school next year? LA and San Diego say no. Orange County says yes. So this thing is being, I mean, there's there's so much misinformation out there. I don't know how a consumer isn't supposed to be confused. Again, this channel is about the consumer, and right now the consumer has been bombarded with stuff on both sides. What are they supposed to do? They're going to sit in place and do nothing. And that impacts our economy. That's why the economy will be in an L, because we don't have a consistent message. It changes every day. What's a consumer to do? Yeah, it's pretty crazy. If you want a little good news and you're a outdoorsy, you like going off-roading, the Ford is bringing back the Bronco. I think it's been 24 years. I didn't write that down, but I think I read that. 24 years since it was out there. It's going to be the open air Jeep. That's cool. Again, it's a unique offering from Ford, right? It's not a competitive market, so it's nice to see that, hey, you're creating something for a niche consumer, but the consumer is real. I mean, lots of people were already applauding, so good for them. Looks like cruise lines may need to raise more money. It's amazing. Now they're talking about no North American cruises until the second quarter of 2021. Like Qantas, that could change in a heartbeat if a vaccine came out. But man, it's not good. I heard Royal Caribbean has 11 months of cash. Norwegian, I think, is the strongest at 24 months. But if you're playing in the cruise lines, man, you're playing in a pile of water that's pretty dangerous. So not cool. I'm afraid China and U.S. relationships, as I talked about, I think yesterday or the day before, not getting any better. The stuff going on in the South China Sea is not going to be fun. That has an opportunity to create real havoc. Lockheed Martin now is getting sanctioned by China because Lockheed sold military material to Taiwan. This world is very combustible right now, and number one and number two players, China and U.S., are not getting along, and we're not going to get along for probably quite a while. So we need to watch that. Yep, October 1st is a big day for airlines. Delta is out today. Basically, they lost $4.43. They're losing something like $20 million a day. After cutting, they're still losing $20 million a day. I don't know how we don't have at least one less airline at the end of this. It just doesn't make any sense. Doesn't make any sense. And then lastly, Citigroup. We talked about JP Morgan and Wells Fargo. I looked at them last. Citigroup, again, their trading desk was currency and commodities. JP Morgan was equities and bonds. And, if you have a trading desk, you won, right? They exceeded expectations. They put in 50%, they earned 50 cents versus an expectation of 28. So, again, today is, we need to digest these numbers. I think it's a more telling sign that the economy it's not where we want it to be. I am so concerned for the consumer. What I'm really concerned about is hidden pain. Like you, all of these bidding wars for single family homes, all of these, people playing in day trading and gambling, the asset inflation caused by the Fed, it has me concerned. Can the Fed raise asset values enough so that when the pain hits, it's not as bad? I don't know. And I don't know how you solve the eviction problem, right? I'm seeing some pretty scary numbers. Yeah, I'm concerned about the hidden pain. And when does it come out? When does the boogeyman show up? When does the boogeyman show up? So, yeah. And again, all these well, not all of them. I hate declarations like that. A lot of the buyers that I see in bidding wars, again, my market, I'm being outbid by FHA buyers. 3.5% down. They can overpay because it doesn't really hurt their down payment. And again, I've lived in this world before. So at the end, I failed to open up. Remember, we need 130 thumbs up. And if you do that, we get an hour of questions and answers. We got 47 people watching. Thank you, each and every one of you. But we're only at 12 thumbs up. So do us a favor. Hit that thumbs up button. Let's do this. And we will talk tomorrow. All right, everybody, take care.